Good morning, guys. Alrighty, today we're going to be doing something a tad bit different. Today we're going to be focusing only on the Bitcoin dominance chart. And this video is going to be extremely important if you guys are looking to protect your Bitcoin and get the most out of the market while putting on the least risk. Okay, so I've been noticing something on the Bitcoin dominance chart that has drawn my attention, and I've pointed this out to you guys a while ago, but in this video, I'm going to focus on it because now it has become real. Now it's become important that we change how we look to position for this bull market. All right, everyone's excited, or rather, you guys should be excited now. I know things have been slow for the past around 2 months, but the time to have been positioning was back in Jan, back in December. No one listened. Okay, now again, soon in around a week or so, we want to start positioning again. But how we position is going to be determined by this chart over here. You guys know I don't like looking at the Bitcoin dominant chart too often and using it to make trading decisions, okay? But through a macro perspective, through a portfolio allocation perspective, when you guys are deciding, should I allocate 5% to altcoins? Should I allocate 50% to altcoins? Should I allocate 25% into altcoins? This chart does give you a really, really good idea on what you should do, okay? So we're going to be coming back to the daily chart over here because that's where something really peculiar has been happening on Bitcoin for a while now. But I do want to start with the weekly chart. I want you guys to notice that for the longest time, Bitcoin has been trapped in this range, okay? The range between around 48% Bitcoin dominance and around, let's say, 40% Bitcoin dominance, right? How long has Bitcoin been doing this? Well, let's go ahead and use our measuring tool, right? And we're going to measure from the low right over here to our current date. And we've been in this range, guys, for 756 days. 756 days, okay? Now, each time Bitcoin has come to the top of the range over here, we have seen a hard rejection. Back down to the bottom range, up, hard rejection. Back down, up, hard rejection. Back down, up. Hey, this time, it's a tad bit different. Where's the hard rejection? We've seen an initial rejection, but the market picked it up. Higher lows in this entire zone. How long have we spent in this zone over here, guys? We have spent 3 months, 91 days, guys, 3 months in this zone over here. This is a massive change in behavior. Okay? So maybe in the beginning, we could have chalked this off to, okay, maybe we're seeing massive distribution in the zone and we're going to see another hard rejection. We can look towards the lower time frames and get a better idea of what's going on over there. So let's go on over to the lower time frames. We're looking at the daily over here, and you can see that Bitcoin has been putting in a bull flag of sorts along this resistance zone. Okay, this resistance zone on the weekly that we have spent 750 days against, okay, underneath the zone, right? Every time we come up against it, we've rejected. This time, however, we have spent 9 months putting in a bull flag, a symmetrical triangle, okay? That got me really bullish. That got my eyebrows raised. That got me getting excited for Bitcoin. That got me thinking, okay, Sean, while you may want to be allocating into altcoins, be a tad bit careful, okay? Be very, very conservative with your allocation, okay? No more than 5% in my opinion, based on what I was seeing over here, guys. But I may now begin to reduce that even lower and go a tad bit more aggressive on my Bitcoin. I mean, it's already extremely aggressive, but now I'm thinking, damn, I may want to reduce it even more. And why is that? Why is that, guys? Because I've been noticing one of my favorite patterns play out over the past 3 to 4 months. And that's essentially the breakout fake out pattern, right? Where you see a break to the opposite direction of a pattern trade, and then you break back into the actual direction, okay? So if you have a symmetrical triangle, where is it supposed to usually break? In the direction of the trend, and the trend is up, right over here, supposed to break up. But instead, the market breaks down, right? Fakes everyone out of the trade and then breaks back up, right? I've been talking about this for years now. We use this to time multiple bottoms, including this most recent bottom on Bitcoin. But now we're seeing it on the Bitcoin dominance chart. Where is it? Right over here. We broke down. I wasn't expecting this, guys. I wasn't expecting this. And then break back up. This time, I wasn't expecting it. This time, I was like, oh, well, it was good while it lasted. I guess we're going to see this. But no, look at that. Look at that big green candle back into the channel, back into the symmetrical triangle, and now seeing continuation. A new high in the zone, guys. Okay, where else did we see it? Well, we saw it right over here. Falling channel. Where do you expect this to break? You expect this to break to the upside, right? What do we see instead? Break down and then break back up, right? And this is a classical pattern. You know why, guys? Because everyone who's trading for that falling channel is trapped out of their trades, or it baits people to put on altcoin trades looking for the bottom over here. They try to trade this edge from here to here, looking to exit their alts over here, looking for that big move there. But nah. Everyone who entered alts got wrecked, right? At least against Bitcoin, they got wrecked, right? Especially if you're trading the broader altcoin market, it didn't do too well against Bitcoin. You're better off just staying in Bitcoin, right? Now we do it again over here. We put in a nice accumulation, and just when you expect it to break up, it breaks down, luring in all the altcoin traders. In fact, me too. I was like, okay, I guess it's back to alts, right? Back to focusing on alts. What happens? Boom. So, guys, we gotta take this seriously, right? We gotta take this seriously. This is not the time you want to mess around with over allocating in alts. Okay, if you have your favorite altcoins and you want to have exposure to a couple of them, by all means do so. But be very careful. At the very least, keep this at the back of your mind, knowing what you're getting into. Okay, knowing what you're getting into. High risk comes high reward, right? So as long as you're willing to take that risk, do it. But you guys need to keep this at the back of your mind, all right? Bitcoin dominance has a massive change in behavior over here, guys. We haven't seen Bitcoin trade in this area at all since 780 days. This date here, guys, we're talking April 2021. And you know why this is important, guys? This is important because this is telling you that your risk-adjusted returns, your best risk-adjusted returns is by far Bitcoin. In fact, your best stress-adjusted returns, all right? This is a term we're going to be using here at Mango. SAR, your SAR, your stress-adjusted returns is going to be in Bitcoin. So, if you guys are new to this market, be very, very careful of any influencers trying to lure you into buying too many of their shitcoins, buying their bags. Be very careful. Allocate a small percent. Allocate a small, tiny bitsy percent, especially if they're low caps. Stress adjusted return, guys. At Mango, we are focused on trading the stress-free way. We don't want to be having sleepless nights. We want to spend time with our family. We don't want to worry about the markets while we are spending time with our loved ones. We want to enjoy the summer. We want to enjoy that steak. We want to enjoy that awesome beer. So keep this at the back of your minds, guys. Do not over allocate unless you are taking on the deliberate risk, knowing what you are doing. All right, Bitcoin dominance has been behaving differently. Take this seriously. I'll see you guys in the next video.
Hey guys, if you enjoyed today's video, make sure to smash that like button on your way out, and don't forget to check out the Mango dashboard for those epic trade opportunities. Now, unlike TradingView, not only do you have access to all the charts on the Mango dashboard, but you also have access to all time frames for free, along with these powerful one-click indicators to keep you on the right side of the trade. So definitely go ahead and give the dashboard a whirl. Until then, do it the Mango way, do it the easy way, do it the stress-free way. We'll catch you in the next video. Ciao, you guys.